Let's talk about trade rate, trade frequency. Something I come back to often. So, your system's expectancy is based on your win rate, your risk reward, the amount you risk, and the trade frequency. And in theory, if you keep everything else the same but increase trade frequency, you increase profitability massively, right? So that's the appeal, right? And that's the appeal of blackjack players, where you're able to sit at the table and you got an edge if you're a card counter every 15 minutes, right? So we want to trade more because we think more opportunity. And in theory, yes, if you're able to hold all those things together, you can, and you're able to increase trade frequency. Yes, you're going to massively increase profitability. It's true. By the way, welcome in fam. Much Coach Jeff here. Had to do a little event on the beach, on another beach. But I was just getting in an argument with my quant, not like in an emotional argument, but like a debate. So I only talked to a couple people about trading. He's one of the guys I talked to. He's useful to me because he thinks in a similar way, but he has skills that I don't, which allow him to do coding that I'm not interested in developing at this point in my life. So, I mean, we both agree that increasing frequency is super important, or would be nice. But to me, so far, all the evidence that I've seen is you cannot just increase frequency while keeping win rate and risk reward the same. It always degrades, or usually degrades. So the specific thing that we're looking at, for instance, and I'm going to talk to you guys about some of the best traders. The specific thing we're looking at is we have a failed breakdown setup, or a failed breakout setup that can be used, and it can be used to short altcoins. Okay, so Hire is his name. He wants to. Well, what we both like about it is it's inversely correlated with most of what we're doing is trading long. And what also is interesting about it is that it's increases trade rate. So now you have a lot of these alt shorts popping up. Now, my original thesis behind this trade setup was that altcoins act independently of the market. They go up, they go down, they pop off, they disappear. And what I'm finding is that's not true. Altcoins move with the market. They're very sensitive to the market itself. Therefore, in my mind, you should only short altcoins when the whole crypto market gives a failed breakout, right? The problem is you might only get a failed breakout on the crypto market once a year. So you're only shorting altcoins once a year, twice a year, right? You're not increasing your trade frequency very much. However, at the end of the day, we're looking for profitability, not just taking a bunch of trades. And when I'm looking at the data for shorting alts in this way, it's not super conclusive that it's super profitable. And my idea is to use certain filters. So I want to wait for a failed breakout on the crypto market and then go look for altcoins to short. I don't think you can ignore the market. So this is a lesson that I've learned a number of times, where I'm trying to increase my trade rate, my trade frequency, and that's just not, I just don't think that's how you make money. So one of the guys I followed, Bernd Skorupinski, he just shared his track record for the past year, and he took 50 trades. It looks like essentially he trades like, he has an insane trading style where he trades A+ setups only. He took on average 1 trade a week. He trades 1 RR swing trades, mostly. And then at some point he advances his stop to break even. And he essentially had no losing trades. He won maybe 25 trades and broke even 25 trades. Which sounds insane, but it's the real track record he released. And he risked 1%, so he did 25% in the year for a 2% drawdown and 2% max floating drawdown. Now, risking 1 to 2%, right? So we traded this on a $2 million account, so 25% of that was like $400,000, right? 400 or 500 grand. Now, if you had a smaller account, you could also do the same thing, and you could risk 5% instead of 1%. And if you traded exactly the same, your max drawdown would have been 10%, but if you're compounding 5% gain 25 times, it goes a little bit crazy, right? So it's possible to do huge numbers with fewer trades, and I've experienced this as well. My best years trading, the only trade I took was a Bitcoin along, and I just stuck with it, right? And the more I trade, the more money I lose. The more I want to trade, the more losses I have. So my suggestion is to trade less and have systems that trade less. It's easier. I mean, the hard thing psychologically is waiting to take trades, but it's easier to make money when the odds are in your favor, and when you win most of the time, it's also easier to just wait, right? It's when you're losing and you want another trade to make it back and you're losing. So that's where I'm at, and that's what our MTP system does, Market Timing Pro. It trades rarely and it sticks with them. It's like not 1 RR, but 50% win rate roughly, and depending on the asset, 6 trades a year. You trade all the main assets. You might take 30 trades in a year, 50 trades in a year, but you might do 100%. So if you're interested in that, go check it out. I think that is important. So waiting for the signal is important. The big signal, the big filter. So I hope you found that useful. Appreciate you. Much love, and talk to you beautiful people soon, as we're getting over to the event. So in summary, in theory, if you keep win rate and risk reward the same and increase trade frequency, you increase profitability significantly, but in practice, there's a trade-off and you cannot do it. So right, that's my answer. Something gotta give. Alright, appreciate y'all. Much love. Talk to you soon. Peace.